Up until last week, I think the narrative around Chinese labs, they weren't quite as good as the Frontier, but just a lot cheaper. And Moonshot's Kimi K3, that this is the first time that an open model is ahead of all proprietary ones.
What's your take on kind of the overall SpaceX story, Aman? Are we coming back to Earth? Do you think there's more fall to happen, or are we kind of stabilizing?
ByteDance could be the next trillion-dollar company outside of OpenAI and Anthropic.
This whole idea of making compute easier to build, we'll see more companies rise in the rankings as a result.
Hola amigos, bienvenidos a nuestro terrible, horrible, muy malo podcasting secundario de capital trading places. We're in a Spanish mood today because of the World Cup. I guess positive for Spain, not so positive for Argentina.
Yeah, exactly.
All right, so here's our news stories for this week. We're going to talk about SpaceX falling a little bit below its IPO price, maybe some good news on some AI deals, but certainly pricing in the market coming down to earth. Anthropic seems to be getting ready for an IPO sometime in Q4, potentially as early as October. Chinese open weight models, particularly Kimi K3, really surprising people and jumping ahead on some of the leaderboards. We have DeepSeek preparing for an IPO itself. I don't know if they're going to beat Anthropic to market, but maybe before the end of the year. Stripe and Advent are bidding $53 billion for PayPal, but maybe not enough. PayPal thinks they want more. And EU defense tech Helsing company raising at an $18 billion valuation. Let's get started with SpaceX. Kind of been a tough month for SpaceX, huh, Aman?
Yeah, a little bit. It's been down, down, down. Around about July 13, 14, I think they broke issue, meaning they traded below their IPO price for the first time. When that happens, a lot of people just sell. You know, there's some short interest accumulating in the stock. That doesn't help. You know what I think might have taken some of the wind out of their sails is Meta. We talked about Meta last week announcing that they were getting into the leasing business as well with their capacity. Some investors may fear like that's going to put some pressure on pricing as well. So some combination of all those things has taken them down to about a $1.6 trillion market cap today.
The IPO priced at 1.8. They're now at 1.6. Looking at a news item from last week, short sellers had bought the company short. I guess they're about 28% of the available stock as short sellers. That's quite a big portion. Overall, the company has dropped $1 trillion in value from its peak. I mean, I don't know if that's real money. That's really just more since the company started trading, but that is a notable drop in value. I guess some good news, SpaceX is in talks to provide computing power to the Pentagon, similar to the deals that SpaceX pulled together with Anthropic and Google for renting out compute and AI models. That I guess is potentially good news. I would imagine there's quite a bit of revenue they could unlock from providing that to the AI if they do put that together. But what's your take on kind of the overall SpaceX story, Aman? Are we coming back to Earth? Do you think there's more fall to happen, or are we kind of stabilizing?
You know, what happened was, I think they didn't do a lot of price discovery at the start, remember? So they priced at 135.
Hardly at all.
Yeah, and a very limited roadshow with no range. And then the first tick was 150. And then the next trade was over 200. And then, you know, the market cap looked like 2.8 trillion very briefly, but that was also just a lot of retail demand, and I think it's settled. When you price that aggressively in an IPO and you pop, sometimes it just corrects. The fundamentals, though, I don't know where the next support is. They're 119, 120 bucks a share. I guess $100. I mean, the technical traders will probably tell me if I'm wrong, but I think at 100 bucks a share, there's going to be some support. 135 was the IPO price. That might be more of a ceiling. It may be in that range for a while. But the fundamentals you just described look good. They're doing Q2 earnings in first week of August. If they announce, progress on revenues and sign a deal with the Pentagon, Department of War, and maybe other deals like with Reflection or others, that could provide some help to the stock. But I think overall it's been a tough market too. Tech is trading off a little bit. There's been noise around AI. Meta's jumping in the space. So I think it's just a little bit of a tough market, and my guess is it'll be very volatile and bounce around between 100 and 135 for a while. The first lockup will come out in middle of August. That'll be the first release of shares. So, that may affect some of the supply as well.
I guess we'll have to see, and maybe with the earnings announcement, there might might provide a little bit more clarity on where the company will go after that. And then I guess we'll have a little bit of an unlock after that earning announcement, sometime late August, maybe.
Yeah, I think it's 5 days after the earnings release. 20% of select investors will come unlocked. That will be the first wave of selling. But all those investors had a chance to sell in prior tender offers and didn't do it. And so we'll see if there's going to be a lot of selling. I suspect at the current price, it'll be pretty limited. But I think it'll be just it's a volatile ride. And I think if they release good news around new deals to be signed in their AI business, that's maybe a catalyst for the price to bounce back above their IPO price.
Well, moving on to other news, Anthropic seems to be getting ready for an IPO, and that might happen in Q4, possibly as soon as October. They're starting to talk with bankers, including Morgan Stanley, Goldman Sachs, and JP Morgan. Really haven't seen any updates to their revenue numbers. I think the last time we heard some revenue numbers from them was probably at the end of May, doing maybe $47 billion annualized. People seem to be, thinking that the company will do $100 billion by the end of the year. Do you think that they're growing as fast as they were, or there's potentially some slowdown ahead?
It's interesting that they haven't released a new revenue number, an ARR number. We're July 20th, so we're 20 days past the end of June. You would think they have that number ready. They haven't announced it. So if they're adding $7 billion in ARR a month, so absolute numbers are adding the same amount of revenue or ARR every month, and they're now in the, let's call it mid-50s and on their way to, as you say, 100 by the end of the year, and they can guide to that number, I think this is a $2 trillion, maybe even a $3 trillion IPO waiting to happen, because at that level, they're going to be profitable. The gross margins are 65 to 70%. Most of that new revenue is inference. There is noise around, these Chinese open weight models or open weight models in general, whether that's putting price pressure on. But I think right now, those frontier economics seem to be just the numbers speak for themselves. So it seems like that's all a reasonable timeline. The market is just, I think they are probably talking to investors now just to dial in the valuation, and assuming those conversations go well, I would not be surprised to see an October listing for them.
What's going on?
Soon you will know what it is like to be defeated by the hands of somebody who is truly better than you.
You mentioned that the Chinese model might be starting to put some pressure on them, and I think that probably is the case. Chinese AI startup Moonshot unveiled their Kimi K3 model, and not expected, but I guess they really jumped up the leaderboard on multiple different AI benchmarks. And we're probably hearing a lot more about people using these open weight models, which are substantially less expensive and, performance-wise, at least close to the main frontier models. I just can't imagine that there isn't, some pressure that's being put on OpenAI and Anthropic revenue and margins. I just wonder if the fact that we haven't heard any updates on revenue from Anthropic might be reflective of a possible slowdown there.
Like up until last week, I think the narrative around Chinese labs, so DeepSeek and Gwen and Minimax, were that these were fast followers and they weren't quite as good as the frontier, but just a lot cheaper. And Moonshot's Kimi K3 may be at the frontier. Like I'm hearing, rave reviews for it. And the Vercel CEO, Guillermo Rauch, just wrote that this is the first time that an open model is ahead of all proprietary ones for this comprehensive web engineering benchmark. So he's basically saying that these guys are at a lower cost, are just as good as, as Claude and OpenAI. It does turn out, though, at launch, you cannot actually download all the raw files yet. It's all hosted exclusively on Kimi's cloud endpoints, and they're pricing the APIs at a premium pricing tier. So it's not quite open weight or open source, but I think this is what they've committed to doing by July 27. So it feels like, this is definitely complicating the decision for the US frontier models to defend pricing and defend efficacy. It's been an ongoing theme, and I think it seems like this is going to be the tough conversation on the IPO for both those companies.
I think we had been hearing from a lot of other larger companies that they're starting to pay attention to their, token costs. I think there's maybe a little bit of eyebrows raised at some of the bills that came in Q2. Brian Armstrong from Coinbase specifically talked about, trying to keep their costs down, cutting their costs in half, actually, even though their usage was increasing. And I believe he was mentioning use of open source, open weight models. One of the developments is now whether the Trump administration feels like they need to ban usage of these models. This article says the secret Trump administration battle to fight Chinese AI, but I don't think it's any secret, actually. It seems like there's a definite consideration. This is not just for national security purposes or usage, but just domestically overall, considering banning the use of these models. And I think there's been this sort of ongoing conversation about regulatory capture. And our former PAPIA colleague, David Sachs, who now is not part of the administration officially anymore, and he was highlighting that this is really maybe something we should be watching out for and not getting behind regulatory oversight, really keeping more open competition available to everybody so that there's not some leadership that's locked into place for Anthropic and OpenAI. Do you have an opinion about that, Aman? What do you think we should be doing with these Chinese models? Should we be letting everybody compete in the open arena here, or should we be giving a little bit of a thumb on the scale?
The ban these Chinese models argument sounds a lot like cheap Chinese imports are coming in and threatening U.S. industry. We've heard that one before, whether it's Chinese steel, Chinese automobiles. This probably goes back to the protectionism against Japan in the 1980s. It is true, for instance, like BYD is a great Chinese technology for EVs. They are available here in Scotland and in Europe, and they are not available in America. And why is that? Because I think the U.S., they're trying to protect the car industry and Teslas in particular and other U.S. manufacturers. The downside of banning...
But does that really protect those industries, or it just like lessens their level of competition and creates a lesser product in the long run?
Well, that I think that's the free trader argument. And also, if you ban cheap Chinese goods, whether it's AI models or cars, there are a whole lot of American consumers and businesses that would love to benefit from cheap Chinese technology. I think the twist here is that there's IP in play. So different from a car, for instance, just to me, having a cheap car is better. And as a consumer, I'd rather have competition and not want to protect inefficient U.S. industries. The difference here may be that, a cheap Chinese model coming in that then learns from American models and doesn't play fair and is pulling information from companies or is somehow pulling information in from frontier models and using it for their own technology and then pricing it at 1/10 and essentially violating the equivalent of copyright or trade protections. If they are doing that, then I think you can make a better argument for defending U.S. interests and defending U.S. industry with some kind of protection.
But what if they're not doing that, Aman? What if they're just actually innovating and producing better models at lower cost?
I think if that is the case, then I think I and virtually every CFO in the country would want the ability to use better models, cheaper models that are able to cut our costs and make our customers and our businesses healthier. And if that means that OpenAI and Anthropic and a few other these AI models are not going to be as profitable or not going to be as valuable, the winner overall in terms of the beneficiaries will be far better off in that environment than the losers. But I think that you can't take out that IP from the conversation, because I think the reason to ban them or to be concerned about them is that they're using intellectual property and violating copyright and trademarks. China's been a terrible player for intellectual property forever. And if that means that they are stealing information to then undercut US companies, then that is a negative that we should look at. I don't know if that's the case. I don't think that's the case, but that would be the argument for it.
Would you argue that even the leading U.S. frontier labs at Anthropic and OpenAI may have been grabbing some of that content from the original sources of information? Aren't they training on data and information that's available and they're working with their partners to sort of develop that data? It seems like we're just talking about who's stealing first and who's stealing last.
Yes. They did, or they were certainly accused of credibly, and they'll have to reckon, and there'll be settlements and fines. So I think that's where this turns, is can you demonstrate that? But I think there's not going to be a lot of desire from the current Trump administration or Congress to really ban cheap, effective Chinese models as long as they're playing fair and square.
I got a message for all of them. Ready? Shake and bake.
What does that do? Does that blow your mind?
Another Chinese company that's preparing for an IPO, DeepSeek, is currently raising at a $71 billion valuation ahead of their IPO. They had previously just raised a $50 billion valuation not too long ago, a few months back. I guess we had a market scare from this company maybe a year ago or a year and a half ago when it first came out on the radar, and everybody was like, oh my gosh, Chinese companies are competing at, more levels than we thought.
Well, I think they were the first one that made everyone think, wait a second, maybe there's a cheaper model that is almost as good coming out of China that may only be a few months behind these expensive American frontier models that is going to shake up our industry. They did raise at a $50 billion valuation. That was a very unusual round. It was led by the CEO, who's really a hedge fund guy in China. It was all Chinese money, really no effectively international money. There was some money from international funds, but it was funds that mostly play in China. The question is, where do they go public? Do they do I don't think they want to do a U.S. listing for the reason that we just talked about. They wouldn't list on the New York Stock Exchange or NASDAQ because that's a political non-starter given intense Washington scrutiny over Chinese AI architectures. So let's assume that they go either in the Shanghai Star Market or maybe the Hong Kong Hang Seng. But I think chances are they go in Shanghai. And if they do that, I think they could go public tomorrow, probably be a $70 to $75 billion IPO and raise, $5 to $7 billion to continue their CapEx needs. I wouldn't be surprised if they actually do beat Anthropic to that one, because I think they have a very easy path to do that in Shanghai. The question is whether they want to go internationally and raise international money in Hong Kong, and maybe that's going to be a little bit of a longer game for them.
Other moves that are happening in the public market is one of our former alma maters, PayPal, is being looked at by Stripe and Advent for a $53 billion takeover offer. Sounds like PayPal is suggesting that they are worth more than that, but that's still a pretty significant premium to the current company's valuation, right?
Of course. I got to say, I like this deal a lot. So it's a joint bid by Stripe and then Advent International. And I think Block may be involved as well, though the details are a little murky. They're offering $60.50 a share. So it's $53 billion in market cap. That's a 28% premium to the prior trading price. And it's like PayPal has been valued between 35 and 45 billion for most of the past year. There was a time they were worth over $300 billion right at the height of the pandemic. And so they've come, they're down 90% from where they were in 2021. And there are a couple of reasons why I think Stripe would want to do the deal. One is it's just that on the valuation, if they can get them for 53 billion, PayPal did $7 billion in profit last year. So here's how the PayPal stock price has traded over the past year. They've traded up a little bit on the rumors of the acquisition, but they were down in the low 40s in terms of market cap at the end of Q2, and that was down about 90% from their post-pandemic peak. And so one reason why Stripe may want to get them is just the valuation is very favorable. PayPal generated $33 billion in revenue in 2025, $7 billion in EBITDA. So it's basically a 6 or 7 times, maybe a 7.5 times PE multiple. And I got to think there's a lot of opportunity to take costs out of PayPal. And if they were to be part of Stripe, that profit would go up. So you're getting at maybe a 5x multiple in profit. So why wouldn't, on the one hand, why wouldn't Stripe want to do that? PayPal has really struggled the past few years. You can see the gross margins are down from 55% back in 2021. They're down to 46% back in 2025. The reason for that is they've moved a lot towards unbranded checkout flows, so very low margin payment processing volume that's driven top line, but not really profits. Braintree is a big asset that they bought a while ago. That revenue, as far as I can tell, is unprofitable, but that's been a lot of their top line growth. Not a great business in terms of their current position. I think what could make sense though for Stripe, and the reason why I like the deal for them, is PayPal has a lot of consumer wallets, over 400 million consumer, I think 439 million active consumer accounts at last count. So Stripe spent a bunch of years trying to build their own cross-merchant identity and fast checkout network. They called it Link. If you ever buy from a Stripe-supported merchant and click on Save My Info for next time, you're using Link. Now, no one knows that they're using Link because they don't brand it that way, but they do have 250 million users. It's just, no one knows about it. So PayPal, everyone knows PayPal, 439 million accounts. If Stripe gains access to that huge, large network of pre-authenticated, verified financial identities on the web, it's a huge win. And when you get that consumer network, Stripe can then execute a closed loop. This is the magic of PayPal. They're working right now with merchants, but if they can get all those wallets into their system, they can use their PayPal accounts, your PayPal balance, your Venmo balance, The cash never leaves the Stripe PayPal ecosystem. They can route money from the consumer to the merchant through ACH or through their internal closed network and just bypass Visa and MasterCard entirely. And if you cut the credit card toll booths out of the game, the net margin on these transactions goes way up. So I think it makes a lot of sense for Stripe to go after this. PayPal's done, I think, a good job on crypto. Their first shot at crypto in 2020 to 23 was kind of a clumsy failure, but they've built some rails and built their own stable coin called PYUSD. It's over 3 billion now in market cap, but I think Stripe could really benefit by building out their wallets and getting consumers to add crypto to their wallets and creating another alternative payment railway to Visa and MasterCard. So I kind of like the deal. I kind of hope they come to an agreement. I know PayPal's going to hold out to negotiate, but I'm kind of rooting for this one to happen.
Yeah, I wonder if there's a little bit more of a story here than maybe is just at face value. By the way, the news this morning was that the PayPal board rejected that offer. I'm guessing we probably haven't heard the last of this, and there might be a more hostile effort to take over the company if there's people on board playing ball. But I wonder if there's maybe moves happening in the stablecoin world that are driving some of this deal. I think there was, recently the announcement by Visa on their stablecoin platform. Stripe has been making moves in the stablecoin world as well.
Yeah,
arranging this money with Advent. I wonder if Stripe is not just using this money to consider buying PayPal, but maybe considering making other acquisitions in the market as well.
So you think PayPal will counter and Stripe will want to up their offer? Is that your thinking? If this is a start of a roll-up?
I'm not sure how you can counter an acquisition offer. I guess maybe ask for a larger number, but they're not doing that at the moment. But it's already like a 30% premium to the current share price of the company, right? So I guess how much more do you think the company should be worth if the market's already saying that's a 30% premium?
Yeah. I think they're probably playing hard to get. I think the shareholders at a certain point will also, they'll have the final say. So if the board says, no, we don't want the 30% premium, and they do have they have a fairly new CEO, Alex Chris, is maybe a couple years in. Remember they had Dan Schulman up until 2023. Chris might be a couple years in. They have said they're in a turnaround. I guess they're in a turnaround. Maybe the board is going to get a little bit of time just to consider the offer, but I have to think that shareholders will not be happy to just walk away from a 30% premium if the stock price doesn't continue to rise from here. They may force the board to reconsider this offer. But my guess is right now they're just negotiating and playing a little bit hard to get. And I wouldn't be surprised if there's another offer on the table in the next week or two.
Ricky, you and I, we both know that this marriage has been over for a long, long time.
No! I honestly did not know that.
Our last story for today is another defense tech company. EU defense tech company Helsing is raising at an $18 billion valuation. They're raising $1.8 billion from Dragoneer and JP Morgan. Defense tech getting a lot of headlines lately with companies like Anduril and Saronic. Seems like there's no end in sight for defense tech, Aman. I guess we're seeing continued war in Iran and Ukraine, and lots of people looking at different type of defense tech areas, drones as well, right?
Yes, exactly. I think this is a trend we highlighted again about a year ago. Defense budgets across the board, across the West, are rising. The U.S. is spending something like 3% of its GDP on defense. That number used to be 6% in the 1980s. It was 9% of GDP in the 1960s when Kennedy was president. So on a relative basis, the budget has lagged. Europe has been even further behind. Most of the NATO members not hitting their 2% of GDP defense allocation. That's a NATO requirement until I think recently now the budgets are getting back up to 2%. And this is a German company. 5 years ago, Dave, I would not have thought that a German defense company, a German military company, would be the premier tech unicorn in Europe. But here we are. Apparently, it's Germany is rearming, and they've been this company it's a defense AI powerhouse, and they've got 441 million euros in revenue. So the funding of it has been it's a 32 times forward multiple. So pretty significant valuation, and just in pricing, and I think continued growth. But that's just a reflection of the geopolitical context and just defense budgets across the board, dramatically increase, they're going to be in a perfect position to capitalize.
We have back some frequent guests, Adam Crawley, who is co-founder at Augment Software, and Marcelo Ballvé, who is head of research at Sacra. You guys have been with us before. We're going to talk about the latest updates for the Augment Power 20 that are coming out. Hopefully by the time this launches live, they'll be on your website, and this will be the Q2 numbers. SpaceX is out, right?
Yeah, that's
20,
right.
20 years of being private, huh?
After only 20 years, exactly.
We've been doing this report for 11 quarters straight, and it's been the number one company for all those 11 quarters in the secondary markets. So it's a big change for the Power 20.
And I guess along with SpaceX being out, Cursor is out, or Anysphere, because they're acquired or being acquired by SpaceX. And Cerebras is also out because they went public as well. I guess look at the first five. Anthropic is the new king of the hill. That's not really any surprise there. Anduril certainly gotten a lot of attention. Full disclosure, that's a company we're investors in. OpenAI, Databricks, Stripe, kind of usual suspects. Neuralink is maybe a little higher on the list than it's been before, up 4 places. Neuralink, a company valued at over $50 billion with how much revenue, gentlemen?
We don't know. Maybe close to zero.
We don't know because they're not telling us, or we don't know because there is none?
Fair question.
Not to cast too much shade on the company. I think Siobhan Zillas, who I've met way back, is a very impressive leader of the company. I think there's lots of interesting prospects for the company, but that is an eye-popping number for either no revenue or an undisclosed amount of revenue.
Yeah, I think it's probably a bit of a premium to where financing rounds happen or where the next financing round would happen, but there's scarcity in the supply and the market just really wants it. So
I guess,
unfortunately, a supply-demand dynamic.
That a little bit of like Elon special sauce, Elon sprinkle dust there, even though it's not exactly his company.
Well, for sure. And with SpaceX being out, if they want Elon, they have to get Neuralink, right? That was the 8th most active name, the name with the highest share price gains in the quarter. We use both those data points to inform the rankings. So
how do you guys comprise these rankings, and what factors are going into your decisions?
We run this formula. It's got 8 factors in it. They're weighted differently. But 6 of the factors cover market signals, price change, spreads, bid-ask activity, trade activity, etc. And then we have revenue and revenue growth. We try to balance out what's going on in the markets, which I think, as Adam said before the show, when we were chatting, they don't have perfect information, much less in these markets. But we try to balance out a little bit of the market signals with revenue and revenue growth. And see where things shake out. But, obviously, if there's tons of activity, very positive signals on the market side, that can outweigh the lack of revenue in this case.
I guess if I'm looking at the numbers, percentage increases on share price and revenue, a few things jump out. So Anthropic up 92% on share price and up 1,500% on revenue. Those are quarterly increases or annual increases that you're talking about there?
Those are annual. The revenue is annual. And that's a good call out there. Maybe it's not clear, but yeah, the revenue increase is annualized year over year. The share prices are quarterly changes.
Got it. So share price has almost doubled from the previous quarter. Revenue has gone up a crazy amount. Maybe any other notable increases in revenue here? Kalshi probably is the one that's gone also crazy. $3.5 billion in revenue. That's really pulled away. And Kalshi, I think, kind of raising at a new valuation, right?
That's right.
Yeah, that's right.
And I mean, Polymarket, we didn't have a base really, right? Because it wasn't monetizing for a while, but it's at 1 billion as of June. That's a very, very fast ramp up to 1 billion. I mean, obviously they flick the switch. Polymarket is growing as quickly, if not quicker, from like much lower base.
Also Perplexity. That's been the knock on Perplexity. see is the valuation. There was a lot baked in to 20 billion, and people were waiting for the revenue to pick up. And they launched the Perplexity computer product, and then their revenue starting to turn. So keeping an eye on that one too. Seeing some demand start to pick up in Perplexity.
What do you guys think about overall, which companies are screaming sort of buys, undervalued, which ones you might be a little nervous could be overvalued? Do you have any favorites?
ByteDance on a valuation basis. We're seeing a lot of large institutional buyers come in on ByteDance at this level. It's 2 or 3 times current year revenue. I think that's one that stands out.
That's a crazy amount of revenue. I guess on a revenue multiple basis, it's barely 3x, right? Maybe 3.5x, something like that.
The Neuralink, as far as expensive, I think that one stands out.
ByteDance has its own models, right? It's moving them more in the direction of closed. You could almost treat it as a comp for like Anthropic or OpenAI. It does look really low at like 3.2x 2025 revenue.
Kaoshi's growth too. Even at 23 billion or wherever we're seeing it here, that's right. It's pretty significant magnitude of revenue and growth.
Obviously, I'm biased because we're a holder of Canva indirectly, but I feel like Canva and maybe Ramp are quite reasonably valued based on their revenue, and maybe Prometheus is also sort of in that category of an outlier just because that's a bet on Jeff Bezos. And we were talking about on the last show that one of Jeff Bezos's favorite sayings is "Your margin is my opportunity," but in this case, I would say "Your valuation is my opportunity." And Prometheus at barely less than 1/10 of the price of SpaceX.
That's right. In parallel, Blue Origin doing around right now 100 billion plus.
Yeah, I think both of those are interesting. That he has 2 completely new businesses that are largely just valued based on his reputation, not on any observable metrics at the moment.
It's a foundational LLM, and when Elon came out with a third, it was like, he's basically the only one that could do it. But then it's like, okay, well, who else is in the Elon category? And that's Bezos. So I think that's like the exception to like who can build a successful foundational model at this stage.
And it's part of the physical AI trend as well, right?
I guess there's another company that isn't on your list that I was wondering about, which is Atoms. Travis is probably also in that category of like, sparkle dust founder, whatever he touches, valued at billions of dollars. But is that just not big enough to crack your list, or is that on the watch list for below the 20?
I think that's on the watch list. We're starting to see more demand in that pickup. On the demand front, I will say Project Prometheus, this is probably one of the most demand names I've seen outside of Anthropic and OpenAI. I was quite surprised by the amount of demand that we saw in Prometheus.
Well, you told me that day at school for career day. You came in and you said, if you ain't first, you're last. Oh, hell, Ricky, I was high when I said that.
You guys have called out 2 different groups here, one that are most active companies and one which is the largest price gains. Could you comment on, what's on your list of most active power companies? And again, I think we're not surprised with maybe those top 3 or 4, but maybe the rest of those.
Yeah, just to flag, Prometheus, Adam already mentioned, but a couple of these companies, Crusoe, Cognition, new in terms of this level of activity this quarter versus prior quarters.
Yeah, I think I wouldn't be surprised with the first 4 on that list, and maybe Databricks and Shield have been there as well. But Prometheus certainly new, and maybe Neuralink, Crusoe, Cognition, maybe not new, but at least still, maybe more active than one would expect.
It felt like a bit of relative value play in the second quarter, where a lot of the foundational models, they're quite. Anthropic, they raised around almost 1 trillion, but the market was trading it higher, like at 30%.
Yeah, a lot higher,
30 to more premium, and so we did see more demand come into the kind of like not small cap, but still growth, medium size market cap names like Cognition and Replit. So there was a bit of rotation into those names, and even OpenAI towards the end of the quarter and now into this quarter, we've seen a lot of demand in OpenAI.
That's interesting, right? Like, I think there's, a lot of not great news for OpenAI over the last 3-6 months, but has that calmed down a little bit? or are we just used to like the crazy news coming out of all those companies?
Well, look, there's a bit of hype obviously in this AI cycle, and we see it in the marketplace. Anthropic, there was a bit of cool down in Anthropic. I mean, I think there's still there's still obviously a healthy demand, but there was a little bit of rotation back into OpenAI. I mean, I've seen probably a 100 billion a billion in demand just in the last couple of weeks. So in OpenAI.
Just on Anthropic for a second, I guess, maybe we're past the, fable mythos sort of brouhaha with the U.S. government. Maybe we're not. But I think there's a ceasefire that's happening there. Maybe not in the streets of Hormuz, but at least with the U.S. government in terms of, shots on Anthropic. But I haven't heard any new revenue updates from Anthropic recently. And they were sort of punching out those revenue updates pretty quick when things were rising fast. So do you think that slowed down a little bit?
No, I don't think it's slowed down. I mean, I don't want to go on the record necessarily. Maybe Adam can, but for June, I've heard, like a serious number that would not indicate any slowdown at all.
I mean, it seems like the market's expecting 100 billion by year end on Anthropic ARR. That's kind of like the sentiment.
Yeah, I've certainly heard that that's a number that seems within reach, and I've heard people talking about at least a $2 trillion valuation, if not a $3 trillion valuation for the IPO. Right. Have you guys heard things like that as well?
Yeah.
So it sounds like might be even October. I was just looking at some reports that indicated that seemed to be when they were zeroing in on a date.
To add to what Adam was saying in terms of the rotation, it's interesting that with Cursor leaving the list, we had Cognition and Replit go in. I mean, I think it's interesting to me that there's more than two horses, so to speak, in coding agents. You have Cognition, you have Replit, you have Lovable, which is not on the list, but very relevant. It's not one of those markets that's totally consolidated yet. The companies are chasing kind of different segments, doing slightly different things. But you could say we still have like 4 coding agents, in market growing very quickly right now. We have Reflection AI on our honorable mention sort of page. That could have a huge impact on the market if and when Reflection AI, like as the anointed U.S. source champion, finally ships a model.
Well, Meta and Thinking Machines also, I believe, released their open source models.
Yeah, and I think even Decagon's founder said the other day, Decagon, AI customer service software, they said that they're running already, right, running like 80%, 90% of their workloads through open source. They're still increasing their spend on like the frontier lab stuff. But as you see more and more companies going towards that efficiency frontier, and there are models that are, not out of China that folks can, turn to as sovereign AI and feel more secure about, or whatever concerns they have, I think that could have a huge impact on the market and possibly on OpenAI and Anthropic too. Although, I think people will continue to spend on those more expensive, like premium tokens as well.
It seems like there's more attention to the cost of tokens and AI spend, and I just wonder if that's putting pressure on the margins for Anthropic and OpenAI. And I don't know if that slows down their growth overall, but I wonder if it slows down their growth of revenue or at least profitability.
Well, I think one thing I will say about that is that we did a study about the gap in token price between OpenAI and Anthropic. And that gap was very, very wide at one point, and it shrunk, right? The delta is much narrower now. And I think that speaks more to Anthropic having to, not being able to hold on to their premium over OpenAI as much as they were able to in the past, because of
or even the rest of the market, too, not just their margin difference over OpenAI. I think there's probably, one set of evaluation criteria for high performance, complex tasks, potentially that have, security risks or concerns. But there's a whole other set of tasks which maybe don't have security concerns and don't need, the highest level of complexity, and feels like a race to the bottom on pricing for those types of tasks and services. I don't know if you saw the post by Brian Armstrong at Coinbase maybe a few weeks ago, where he was talking about their use of tokens were continuing to scale, but their cost of spend was being cut in half. So, something people are tracking at least, maybe as a result of seeing their Anthropic bills go through the roof.
Yeah, yeah. And that's like a margin tailwind too for companies like Replit, that are essentially, reselling tokens, right? Because they can acquire cheaper tokens, sell it at whatever price they're selling at. And that's actually, that's actually a tailwind for them as a sort of middleman.
Anthropic, OpenAI, probably are still the leaders, at least in perception, if not reality. I just still wonder whether all this other competition happening, whether it's Chinese open source models, US open source models, or just other players, maybe it puts more pressure and forces them to play a little bit more pricing game. You had another set of companies here that are the largest risers in price gains. And again, I think we had talked about Neuralink being a pretty crazy bump up on that list. Any others here that are surprises that we would pay attention to?
Well, we've had an eye on Saronic for a while. I think that one's starting to move.
Yeah.
Now, they just did a financing round, and even in the secondary market, we're seeing premiums to that round valuation.
All of these companies, Anduril, Saronic, Shield, Havoc, etc., kind of in this new category of fast-moving defense tech, pretty capital intensive. And it feels like all of those companies are getting a lot more attention. And I'm guessing developments in both the Ukraine war, the Iran war, a lot of attention on drone development of all kinds. Probably really upending, how we think about defense tech in the past.
But what you said earlier is true as well, though. These aren't software companies. There's huge amounts
capital intensive.
Yeah, very capital intensive, huge amounts of friction in going from like prototype to scaling production. All kinds of idiosyncratic things can happen. I think Shield is a good example where, obviously it's still, super relevant company, but they missed their revenue targets for 2025. They had a CEO changeover. They had a safety incident. Now they're guiding to 70% revenue growth, all the way through 2008, saying they can get to 1 billion. But yeah, they missed revenue targets 2 years in a row because of these kinds of idiosyncratic things that happen. And when you get those government contracts, that's not like money that just pours in like SaaS, right? It's like you have to hit certain milestones. And if you don't hit them, the money doesn't come and it can get slowed down. So just kind of a different business that, maybe a lot of us aren't as familiar with in terms of the business model as some of the software stuff.
Are there other categories of companies on the overall list that are interesting? And, I think you also have some companies to watch that you're sort of saying might join the top 20 in the near future. Like it feels like there's a group of, AI related software companies that are definitely, got a lot of attention. There's a group of defense tech, space tech, hardware companies that get a lot of attention. Anything else that we're sort of overlooking there? Maybe prediction markets?
Yeah, prediction markets. I think robotics, that theme is not going away.
Robotics, right.
And two of the names of the companies to watch, Ep41 and Skilled being a software play and Ep41 hardware. I think people are still trying to figure out who's going to win in robotics. And obviously that capital intensive and hard. And I think people are spreading their bets on that one. There's not a clear winner right now.
I think it's interesting, Adam, that the companies that made it on the list, they kind of pull at that whole, like hardware versus software approach, like where's a good place to put the bet right now. And then there's the whole humanoid versus non-humanoid question, like legs or no legs. I think that's being debated a lot right now too.
Well, Dick, here's the deal. I'm the best there is, plain and simple. I wake up in the morning, I piss excellence, and nobody can hang with my stuff. I'm just a big, hairy American winning machine. If you ain't first, you're last.
So if we go back to your overall top 20 list, who isn't AI related or defense tech related that you think is a standout there? I guess Stripe, just like boring old payments, right?
Yeah.
Yeah. Look, that's exactly it. And they're in the news talking about potential acquisition of PayPal.
So PayPal, maybe, right?
Yeah.
Might put Ramp also in that fintech category,
Yeah.
Basic stuff. Maybe you could put Revolut there too.
Yeah.
Yeah, I think these companies are getting overlooked now, and they look more approachable from a multiples perspective as well.
Right.
Yeah, at least relatively speaking, less hype, but a lot of interest, like a lot of impressive performance.
we mentioned the softening in some of the software company demand. That's, the perception that maybe AI is touching those companies like Canva and Rippling. Seem to be quality businesses that could be interesting as demand softens there.
What's your take on the overall SaaS apocalypse effect on, non-AI or, maybe not originally AI businesses? Do you feel like that's calmed down a little bit, or there's still, pressure on SaaS companies because of SaaS apocalypse sort of, I don't know, Claude taking over everything as soon as they announce a vertical plugin?
It's still in the minds of people in the market. I mean, we are seeing
Yeah.
softness in these names, and I think that's also could be an opportunity. So I think people just aren't sure without perfect information.
Figma had a pretty good quarter and, didn't necessarily come back to where it was before, the last 6 months. I think it's been falling down pretty considerably from the IPO.
Yeah.
But maybe at least a little bit of recovery in the markets from the last month or so. I think it's up 30% in the last month, even though, down 20% over the last 6 months. I think the revenue multiple was, somewhere between 8 to 10, which is a little higher than the median for sure. I think that a lot of the pressure on Canva's price was based on Figma going out at a big number when it went public, but then falling considerably over the subsequent 6 months. And maybe there was at least a little bit of a recovery from Figma based on the recent quarter announcements. I don't know that we've seen a dramatic recovery in Canva's secondary trade price. I think there's still probably, last secondary trade for Canva shares, I think was done at 42 billion, and seems like the market's trading it a little bit below that. But I wonder if that's a buy opportunity. Again, full disclosure, we're behind that, so I'm talking my book here, but does feel like that one's a bit of a buy. Going back to that list of newcomers or companies that are on the ones to watch, what else on this list? Open Evidence and Harvey are sort of software verticals, right?
Yeah, vertical AI. That's definitely been a theme that's been emerging. I think there's questions around defensibility there, but to the degree that Harvey gets entrenched in big law, Open Evidence is already ubiquitous in clinical medicine. It gets hard to rip them out after a while if they build brands. But yeah, there's a lot of competition in both spaces.
And I guess Applied Intuition is a combination of software and hardware, and maybe Skilled is trying to offer a default OS for robotics, correct?
Yeah, like a multi-form factor brain for robots. And it has competition as well there, like Physical Intelligence, Yamakun's company.
Going back to maybe our overall list, at some point in the next 6 months, I expect Anthropic will go public and go out of our rankings. I think the same thing will happen to OpenAI. That might, be Q4, might be Q1 or later. What does that list look like once those two big outliers are out? Is there any less concentration? It felt like the list was getting more and more concentrated when we were talking about SpaceX, OpenAI, Anthropic. Once those three are not in the mix, you don't have trillion-dollar companies sitting around there anymore, maybe with the exception of ByteDance, heading that direction. Now it's a lot more companies that are maybe in the $25 to $200 billion range. Do you think it gets less concentrated, or you still think we're going to have more concentrated effect in the overall market?
Well, just speaking to the data, we already saw a big downtick in concentration just with SpaceX leaving the list, even with Anthropic and OpenAI still there. So, I think in a way it's healthy, right? To make room for other names. They've been, concentrating a ton of the activity. Right now, I think the aggregate market cap of the Power 20 is like, 2/3 OpenAI and Anthropic. That'll make room. That'll make room for, physical AI, for the software layer beyond foundation models.
What do you guys think is the number of companies that make up half the market volume? What's the number of companies that make up 80% of the market volume? It felt like we were getting to less than 5 companies that were half the overall trading volume. Is that now not the case, or is that still the case?
No, I mean, it's gone down. I think the top 6 names were at nearly 50% of all the activity that, that we see, not just within the Power 20, but across all of the Augment platform. And now it's one third of activity. So from a peak to nearly 50, it's kind of like almost to the level where it was before things got crazy, right around, Q4 24. it's back to that level. And so, yeah, if OpenAI and Anthropic leave, we could see the most broad-based, secondary private markets that we've seen, certainly for the last few years.
Going beyond that top 20, I've heard previously from other folks that like the top 30 names made up 80% of the market volume. Do you think that expands any further again, or is it still going to be the top, top 10 names are half the market, top 30 names are, 80% of the market, even without, those big three in the mix?
If you think about a percentage of a company's market cap trades per year, I mean, removing these big trillion-dollar companies definitely has an impact on the volume. I can see Databricks and Stripe kind of becoming those next big companies that will trade big volume. I don't know. I see that it's starting to diffuse a bit. I could see 50 companies making up 80% of the volume.
Any thoughts about whether you would expand your Power 20 to Power 25, Power 30? Like, why 20 companies?
Yeah, we landed there, I guess, a few years back. It's funny because there's names we like that the data shows that's like they're quite strong signals.
Not to mention other folks in the market, but other groups whose role the name was listed top 30 companies or top 50 companies.
I think it's nice to have an elite, that kind of, gives you constraints. You have to like kind of forces a cutoff. It felt like, this is something that people can get their arms around. It forces a real bar in terms of, whether they can make it in or not.
Okay, guys, I think we've covered most of your list here, but I'd love to ask you for one bold prediction, either about a trend or a company. What should our audience keep in mind for, upcoming Q3, and what's a notable sort of observation or prediction you'd be willing to make?
Yeah, I think I'd go with sort of data center adjacent kind of technology plays. Like we saw Crusoe go up 6 spots in the rankings. You have Armada on our honorable mention list that is, building modular data centers for sort of, industrial and defense environments. I think that this whole idea of making, compute easier to build, more efficient, faster to build, et cetera. I think, this kind of like, nitty gritty infrastructure play, I think we'll see more companies rise in the rankings as a result, not just Crusoe and Armada.
What I'm hearing you say is picks and shovels, baby. Picks and shovels.
Yeah, I should have just said that.
But picks and shovels for AI data centers, picks and shovels for defense tech. Adam, how about you? What's your crystal ball projection for the next couple months?
I think just paying attention to open source and how that filters into the foundational model of margins, and then ByteDance could be the next trillion-dollar company outside of OpenAI and Anthropic.
Yeah. I would agree with you on that. I think they could be the next trillion-dollar company. I guess one more comment on Marcelo's observation. Did you guys see that there was a big acquisition that just happened by Elon? Not SpaceX, not Tesla. He acquired $1 billion gas turbine company, mainly just because he can move them around to the data centers for power. APR Energy was $1 billion acquisition by Elon, not either of the companies, and very quiet, wasn't announced.
Yeah, super interesting. Yeah, kind of a personal play there.
A fleet of mobile gas and diesel turbines so they can move them around to different data centers. I think that was what he was getting sued for, like exceeding the regulatory oversight of how many they'd spun up. So definitely fits your picks and shovels thesis there, Marcelo. I think we're energy constrained and grid constrained on some of these businesses.
Yeah. And people are, there's a backlash and a political element too, which
huge.
We shouldn't build them, but it means that the more efficient they can get, the less impact they can have on the rest of the grid, the easier it'll be to build out those megawatts.
Yeah, I think even some companies trying to get out in front of the bad press by saying they'll subsidize the cost of electricity wherever they're building out stuff. And I think some states already like outline further growth of like, I don't know, power consumption data centers, right?
Yeah.
There's a lot of
there's Massachusetts or somebody else, but somebody had.
Yeah.
Could be an election issue.
That's right.
Well, thanks for joining us again for the quarter. Appreciate the insights there. So Marcelo, I guess picks and shovels for AI data centers and defense tech. And Adam, you think ByteDance is the next $1 trillion company, huh? I kind of think you're right on that one. Thanks a lot for joining us, guys.
Thanks, Dave.
Thanks for having us, Dave.
All right, we're back for another Valuation Corner with Professor Aman Verjee. And Professor Verjee, we're covering Crusoe today, right?
We are. This is not the Robinson Crusoe novel from Daniel Defoe. They are a AI-optimized cloud infrastructure AI company. Let's call them a neo cloud. I'll explain what I mean by that in a second. But they're basically a company that is managing AI workloads. They are in discussions. They are rumored to be raising at a $30 billion valuation. They're at a $500 million revenue run rate as of now. They're projecting to increase that quite dramatically, more than $1 billion, maybe as close to $2 billion at the end of this year. So they're being valued on a current ARR multiple of about 60x. But if they can get to $2 billion by the end of the year, then they're more like a 15 times revenue valuation, which would be a lot more reasonable. They've made a lot of progress. The last time they raised was about 9 months ago, October 2025. They did that at a $10 billion valuation. Valer Equity Partners and Mubadala were in that round. They had participation from Founders Fund, and Spark, and Tiger, and NVIDIA, and Salesforce, and a bunch of others. So very successful company, certainly one to watch. And they're part of a new trend that I just want to explore with you called neoclouds. And I want to think a little bit about how they're changing the AI stack and what this means for valuation. As I said, they were named after Robinson Crusoe. That's the book. It's a fictional autobiography of a Robinson Crusoe spends 28 years stranded on a desert island as a castaway. I'm in Scotland today at the end of a family vacation. It's actually based on a Scottish sailor. There's a little bit of a wordplay here. The way the company started was literally going after stranded assets. There's something called flared natural gas, which is the gas produced when you produce oil. When you're extracting oil, a certain amount of natural gas gets produced, and for the most part, that's wasted. It's a byproduct of the oil extraction process. It just gets burned off. And the company decided, hey, that seems like a waste. Why don't we harness that energy and use that to power green data centers? And they built their neocloud platform around that. You can see the revenue growth of the company. Back in 2023, they were up to 152 million in revenue. They basically almost doubled that in 2024, or on a pace at the end of 2025, they doubled that again. If they double again, they'll be at $1 billion, but I think they're going to be well north of that in 2026. So very rapid growth for the company in a very short amount of time. They are the company behind Stargate. You might remember the announcement, $500 billion announcement that was primarily OpenAI was leading, but SoftBank was financing it. Well, they were the ones who were actually building out this facility in Abilene, Texas. That was a 1 gigawatt AI facility, and they're planning on doing more. They've gotten a lot of expertise in building out the physical part of the AI stack. What do I mean by that? So let's go through the pieces of the AI stack and think about what each one means and where they play and who some of the players are. So at the very bottom, we've got power. It's energy. It's for the most part oil and gas and coal. In the US, oil and natural gas and coal is something like 65 to 70% of all the power produced in the US. It's nuclear. That might be another 8 or 9%. It's solar and wind. That might be another 4 or 5%. So that's folks like Constellation Energy. The traditional power grid operators aren't moving fast enough. So it's people like NextEra and Constellation are really driving a lot of the value here. The next level on top is infrastructure. So it's silicon chips, it's hardware. For the most part, that is NVIDIA. There's a few other now trillion-dollar chip companies like Micron and Samsung and SK Hynix out of South Korea that are in that category as well. Cerebras, another player in this space as well. Then there's the cloud. That's the third layer. And that's, I'm calling it cloud. That's not really quite the right term. It's the term that everyone knows what I mean, but it's not really as descriptive as it should be for an AI stack. Maybe the better term would be orchestration layer, but a lot of people don't really know what that means. At any rate, it's the compute fabric. It's the Amazon Web Services is the market leader, followed closely by Azure. Google Cloud is the player. XAI is now a player. Meta is now a player in this space. Oracle Cloud is a player in this space. The next layer up is the models. That's the LLMs, where a lot of the attention's been paid to Anthropic and OpenAI and the Chinese open weight models. And then the very top, tippy top of the stack is the application layer. So these are the agents and the UI. It's Claude, it's Gemini, it's Perplexity, it's Copilot. So where do these guys play? I wouldn't call them a neo cloud. They're not playing in any one layer specifically. They really are playing like CoreWeave in 3 different layers. They are in the power layer, they're in the infrastructure layer, and they're in the cloud. Crusoe really began, as I said, at the very bottom, the flared gas capture model, and then decided, well, let's now build the hardware and the cloud piece of it and move up to the 3rd layer of the 5. CoreWeave is probably their biggest competitor. They started off in the cloud layer and are moving down. So you think of them as a competitor to CoreWeave, a very AI-specific stack. Obviously, they are doing great in terms of their financials now, as we saw from their growth. This is a company that is raising a ton of money at I think a very rich valuation. It seems like Founders Fund is going to be in on this next round, and we'll see who else is in the round as well. But it's definitely one to keep in mind. I think given the CapEx needs of the space, given that CoreWeave got out and had a relatively successful IPO, Cerebras got out, had a successful IPO, Crusoe actually could be on the short list of surprise IPOs in the next 6 to 9 months. And that whole bottom part of the stack, that whole physical piece of the equation there's a huge bottleneck for all that stuff right now, right? All the demand that's coming from the top of the stack is creating a demand for all this infrastructure and picks and shovels at the bottom of the stack. And so over the next 6 to 9 months, anyone who needs capital may want to go after the public markets and try to get it.
I think you brought up one of my favorite sound bites, picks and shovels there. As you look at that overall AI stack, it seems like people are aware of the models in the cloud. Maybe they were aware of infrastructure. They probably aren't that aware of power. Do you feel like there's some buys there that people haven't figured out yet? And, as we kind of gradually discover what other constraints are limiting the growth of the overall AI stack, maybe there's some companies that are undervalued, private and public, in that power and infrastructure layer.
Yeah, I think it's really hard to do. And so I think it has been an underappreciated part of the venture capital market, because the knock on all these things, for years was we as venture capitalists don't normally like to invest in capital intensive hardware data centers and all the attendant complexity around building chips and inventory management. That was just an area that we didn't go down for years, but the public markets have put a lot of money into it. And so all the ones at the bottom of that stack that I mentioned are basically public companies. I think venture is now waking up to the opportunities here. Someone like Crusoe is able to find flare gas and identify, oh, this is a source of power that's underutilized. We can turn this, one man's garbage is another man's treasure. I can't remember who said that, but somebody famous said that. It feels like they're able to identify a source of cheap power and capitalize. And we just saw SK Hynix do the same thing. They were a Korean listed company, came to the US, and that secondary offering or that follow-on ADR offering got snapped up. So I think there's going to be a lot of demand for that part of the stack, because there are a lot of companies that are making a ton of money at that part of the stack. And as long as that's true, the venture capital money really ought to follow.
I think there was a surprise news item that happened in the past week. Elon Musk bought a company called APR Energy, a Jacksonville-based energy company that operates a fleet of mobile gas and diesel turbines. This wasn't widely covered or announced. Note that this wasn't a purchase by either SpaceX or Tesla. This was by Elon personally to buy, spend $1 billion. It sounds like the reason was to expand power needs by xAI, which is now part of SpaceX. And to be able to move those mobile gas and diesel turbines around to wherever they need. So that was a bit of a head scratcher. Again, surprising that it wasn't a major announcement. It was kind of discovered by other people. A little bit surprising that Elon would just personally shell out $1 billion to buy this energy company.
Well, maybe he sees this as the bottleneck. All the attention gets paid to the agents and the software at the top of the stack, but he has got a pretty good knack for figuring out where these bottlenecks emerge. I think we identified one last week as high bandwidth memory, and that's why the market scooped up all those SK Hynix shares. And Micron and Samsung are really well positioned at a bottleneck that could be there for 12, 18, 24 months. Power and we see what's happening, the just geopolitical bottlenecks in power. is a real thing. And a lot of states don't want AI data centers. And that's why Elon is exploring orbital data centers. And, if you can figure out a way to solve those bottlenecks, I think those are potentially really interesting. Those are places that are not, you got to be a great operator in terms of building and executing to execute at that part of the stack. And Elon's obviously a great executor. The amount of money that gets thrown into that has been very high right into oil and gas over the years. And it's, if you're not capable of building these things, making them work, that's a potential money pit.
All right. Well, thanks for an interesting valuation corner this week, Aman. We'll keep an eye on Crusoe.
Okay. Thanks, Dave.
Terrible BC secondary newscast. Trading places. Actually, sorry, it's not a newscast. It's a podcast. It's a newscast. So it's dessert topping.
Radio show.
Spain was pretty dominant, though. I don't know if that was like all Spain, 20 shots on goal or something to 0 for Argentina.
I've never seen
really
a World
close.
Cup final where a team never got a shot in the regulation, but the goaltender was amazing, so it was actually entertaining.
Yeah.
Congratulations to Spain. They deserved it. That's soccer. Sorry, football. Football.
Exactly. Football.